Welcome, everybody. Thank you for logging in on this Saturday morning. As you know, today is our topic is what's the reality of housing market. Now, as all of you know, we'll do our presentation followed by our Q&A session. We'll have our mortgage brokers. Kishore is here, Amit is here, Shihan Raghavan from Scotiabank and Harman Chima would be here as mortgage brokers. Sandeep Chopra, Amit Veg, and Chris would be our real estate lawyers for the day. And Bani and Sam are our insurance brokers, Bani Kahai and Sam Gajjar. And Deepak Sharma and Mustafa Ranwala are our accountants. And Mohit Katoch is the financial advisor. As you all know, we try our best to compile this information from reliable sources, but again, we cannot guarantee the accuracy, and please seek professional advice before taking any steps, and we cannot take any responsibility for errors or omissions as usual. So now let's discuss the agenda for the day. So we'll start our day with the 2022 housing market review, followed by this recent interest rate hike that happened last week, or actually this week on 25th. And then we'll discuss this burning issue of identity theft, which is on the rise in GTA. So I'm getting a lot of calls from all of you, so we'll discuss that. And then we'll discuss the vacant home buyers tax deadline. So this is another topic which is a lot of people have concerns. So we'll discuss that. And then we'll discuss the actual topic of today, which is reality of housing market. And then we'll have our Q&A session as usual. So now let's look into our 2022 housing market review. So this is 2022 December. In December, we sold 3,117 homes, which is 48% below 2021. In 2021, December, we sold 6,000 homes, which again was an anomaly. Normally in December, we sell between 4,000 to 5,000 homes, but this year is definitely on the lower side, right? Now, if we look into the year over year complete, like 2022 sales, we only sold 75,000 homes in 2022, out of which we sold a lot of homes in first 3 months when the market was on fire. And after that, we really slowed down and we could not reach even the lowest year in the last 6 years, which was 2018. As you all remember, 2017 was the market slowed down when the government introduced the foreign buyer tax. And then 2018 was a very low year. But 2022 has gone on the record even lower than 2018 in number of sales, right? Now, let's look into the average sale price. So the average sale price in 2022 at the end in December was $1,051,000, which is 9% below December 2021. Right? So yes, we have lost almost 10% year over year, right? But we had a great run for first 3 months. So let's look into this, the whole year of 2022 in a stat. So I want you to pay attention on these two lines, which is months of inventory and average sale price. So as you could see in the first part of the year, in first January, February, and March, we were having a very, very low inventory. We had less than a month of inventory, which means any homes which were coming into the house were getting sold right away, right? And then after April, May, when they started increasing interest rates, the inventory started rising. And then the prices started coming down. Right? As you could see, when we reached from 0.9 to 1.6 to 2.1 to 2.5, and then 3.1 months of inventory in July, which was the highest inventory in this year, in last year, 2022. And the average sale price started coming down from 1.3 million in first 3 months and came down to about 1,070,000 by July. So that was a big drop from 1.3 million to 1.07. So almost like 20, 25, or 20% drop in that period of time. But after that, if you see, From July onward, our inventory is again stable, like 2.4, 2.7, 2.6, 2.6, 2.8, which means we are not getting enough houses, or whatever it means is whatever house we are getting, we are selling the similar number of homes. So our average price has stopped bleeding. It's not going down further anymore. So since July, the average sale price is hovering around the same mark, 1.07, 1.08, 1.09, 1.09, 1.08, 1.05. So which means average price is also almost stable. It's going down maybe 1% or 2% either side, but it's not making any big drops as it was making in the first 3, 4, 5 months after the interest rates started going up. So that's the main story of 2022. Now, let's look into the recent interest rate hikes and its impact, right? So as you all know, on January 25th, Bank of Canada has announced that interest rate hike. And why are they doing that? We all know inflation is the culprit. Because of the inflation, which was rising at a dramatic rate, and it started like in 2021, actually, but in 2022, it started going up from 5.1 to 5.7 to 6.7 to up to 8.1 by June, right? And that's why the Bank of Canada started increasing interest rates, starting to slow it down and bring the inflation down. And as you could see, yes, the inflation has started coming down from 8.1 to 7.6 to 7 to 6.98 and 6.3. So it's going in the right direction. So Bank of Canada is now at comfort. They are happy with the growth or with the decline, sorry, not growth, decline in inflation, and they want to stop it so that it will automatically continue. Normally, the effect of a rate hike doesn't happen right away. It takes few months before the effect actually happens, right? So that's why they have said that now, that we would not increase interest rates anymore. So this is on 25th January when Governor of Bank of Canada has said that we are going to hit a pause for now. So it's a conditional pause, which means if nothing unprecedented happens, if things remain similar overall in the broad sense, then they would not increase interest rates anymore, which is a good news for real estate market, because real estate market is the first thing that is impacted by the interest rates. Now, when asked, now this is, sorry, our interest rates right now. So interest rate right now is sitting at 4.5%. This is policy interest rates, right? So they started increasing it from 0.25, and they had 8 consecutive increases, and they have now, we are sitting at 4.5%. If you look into the jumps, there have been a couple of big jumps, like 1%, 0.75%, and a couple of 50 points before this last 0.25%. And now probably we're going to stop right here. So the Bank of Canada's policy interest rate right now is 4.5%, whereas our average prime rate, that's what we as a consumer, as a mortgage consumers, we want to know more about the prime rate. So the prime rate right now is sitting at 6.7%, right? Which is very high. We know that, but that's probably going to not go any more further, right? Now, when asked on 25th, when they announced this last increase, there was a question asked to Carolyn Rogers about the impact of this interest rate hike on the housing prices or the housing market. As per Carolyn, she's senior deputy governor at Bank of Canada, housing market has evolved broadly in line with our expectations. Activity has come down significantly and prices have also come down. So they are saying we do expect, as outlined in their monetary policy report, that pullback will continue in first couple of quarters of this year. And then because of the strong fundamentals, it will pick up again later this year. So Bank of Canada's view is because of all these interest rate hikes, they expected this market to pull back, and this pullback will continue for next couple of quarters. And then later part of this year, the housing market will jump back. That's their view. Now, let's ask our dear friend Benjamin Tall. He's senior, he's an economist at CIBC. So as per Benjamin Tall, this is not a meltdown. This is not a crash. It's a readjustment. We have borrowed from the future during COVID period. I remember this line when he said that during COVID, like 2 years back, or a year and a half back, when the market was going like crazy. He said it that we are borrowing appreciation from future, which means in future, there would not be any more appreciation, or it may even come down at that point of time. He said that, I remember it. We used it in our webinars. So the future is now. So this is relocation of activity over time, and that will continue. So he's saying that the market is not crashing, it's not melting down, it's just a reallocation of the appreciation which we have already taken from future, and now we are slowing down. So which is a positive development as per Mr. Benjamin Tall. He also said that this is the very first correction ever where the supply is down 10% year-over-year basis. In 2023, supply will rise as the fog will clear. So right now, a lot of sellers are also holding off. Buyers are holding off, sellers are holding off, right? There's a minimal activity. So in 2023, the many sellers who would be forced to sell, they may not be able to hold much longer, will come to the market. That will add downward pressure on the prices, and the prices may go down a little bit more before they stabilize. So that's Mr. Tall's view, right? Now, as per, again, Mr. Tall, for a long-term perspective, it's getting even tighter. Now, he's saying in 2023 alone, 950,000, almost like a million, newcomers will come to Canada. They will be new immigrants or non-permanent residents or foreign students or people from Ukraine. So there'll be a lot of people coming to Canada. And the cost is rising, so we are not building. So cost of building is going up. So we are not building anymore. In Toronto alone, 1/3 of projects has been canceled or postponed. Now, what's going to happen? So again, Mr. Tall said in a very funny way, he said, you don't have to be an economist to understand, to know what will happen as a result in the next couple of years. Supply is down. It's getting even more down. It's getting even more tight. And demand is rising. So you all know what's going to happen. Now, let's discuss our next burning issue of the day, or what's happening recently in the market. A lot of calls are coming. Identity theft on rise in GTA. So there's a big news in media where some people are posing as homeowners and they're selling homes fraudulently. So 32 cases has been reported in Ontario and BC as per Chronostar. Now, as per CBC News, organized crime has mortgaged or sold at least 30 GTA homes without homeowners' knowledge. It's a big risk. You know what? Which means, does it mean that people whose house has been sold, they have lost everything? No, actually there is a protection, we know, and our real estate lawyers who are also present today, and they would also tell us that there is a protection called title insurance, right? Which protects the homeowners regarding such frauds, right? So at least there is some protection, but it's not easy. It can take considerable time and money and effort to deal with having to restore your title or remove any fraudulently registered mortgages on your properties. So it can take a lot of efforts. It's very painstaking. It's very difficult to get this back, right? So yes, the government is trying to take measures. We as a real estate industry is trying to be more prudent. They are sending us better tools to use. And yes, there would be more tools out there, and we would try to stop this, right? So don't worry, people are working on it, government is working on it, so everybody knows about it, and it will be stopped. And actually, I was reading news a couple of days back, they have caught few people who were doing this type of activity recently. Now, next issue, vacant home buyers tax. This is another looming deadline, which is coming on February 2nd. Now, what is vacant home tax? Any home in Toronto, which is vacant for 6 months or more in the year, will be charged an extra 1% tax on the property, which means if the house value, appraised value of that house is $1 million, that home will be charged extra $10,000 in a year as a vacant home tax. So this is the new tax, which has been imposed now in Toronto already, and Peel and other regions are also considering imposing it very shortly. But anybody who's living right now in Toronto in 416 area code, they have to file their declaration before February 2nd. That's the deadline. So there's a link. If you don't have the link, please contact us. We can send you the link. You might have already received that notice in the email, but if you, or in the mail from the city, but if you have not received it, or if you need that link, please contact us. We have the link, we can forward it to you right away. So it's a very quick filing, but have to be done before February 2nd. And if you don't do it, then there is a penalty. You can still file it later. If you fail to file it before the deadline of February 2nd, then there's a penalty of at least $250. So please file it before February 2nd, right? Now, what's going to happen? How many houses are we thinking? So government or city, they are estimating that there is probably about 65,000 homes in Toronto, which would be getting this vacant home tax, right? And that will bring about $55 to $66 million every year into the city. And they want to allocate these funds towards affordable housing initiatives. So that's the goal. Now, there are a number of exemptions available, right? Anybody who, say, for example, somebody has moved to a senior home or to long-term care center, or someone has passed away recently and the house is sitting vacant, or there's major renovations going on at a home and the home is vacant for that reason. So those homes will be exempted, right? But you have to still file this before the deadline. Now, let's get back to the main topic of the day, the reality of housing market. So what's the actual reality of the housing market? You know what? Jeremy Pilarski is our vice president at Remax Realtron. He summed it very well. He said, this is a tale of two crises. What does he mean? Now, it's too early to tell if the housing market has hit the bottom. So on one side, we are all worried that the housing is going down. Prices are going down. Houses are not selling. Sellers are not able to sell. Builders are not able to sell, right? So we are saying there are no buyers. There are no takers for the housing, right? That's one side of the story. On the other side, the government is saying we need to build more homes. We want to build 1.5 million homes in near future, right? And we are trying to take like bold measures to meet the target. So on one side, they're saying there's no takers, no houses are not selling, prices are going down. On the other side, they're saying there's a problem. We need more houses. We need more homes. There's a shortage. There's acute shortage. So there are two different scenarios playing simultaneously at the same time, right? Now, what's happening in short term? As we know, as I said, prices are going down. Number of home sales are going down, as you saw, 48% in December as compared to December last year. Prices are down 10% as compared to last year, right? Buyers on hold or they're missing. Sellers are having the hard time to sell their homes, and builders are not able to sell their new projects, right? On the other side, we are expecting to get 950,000 newcomers to Canada, as per Mr. Tall. Mr. Benjamin Tall said that, right? There's a housing shortage. There, 1/3 of the projects have been canceled, right, in Toronto, or they have been postponed. And rents are on rise. Anybody who's looking to rent these days, either you or your family members, or your investors, and you're renting your properties, you know there's an acute shortage of rental properties. There's a huge demand, right? And government acknowledge that there is acute housing shortage. Now, in short term, it's actually an affordability issue. It's not that the people don't want to buy homes. There are a lot of people who want to buy today at this price right now. They know it's probably the best opportunity of their lifetime, but they're not able to do it because of affordability issue, right? That's why there's a less demand. The demand is not there, which means we are saying the prices may go down further, right? For the same reason. But in long term, there's big supply and demand issue. There's a big gap between the supply and the demand. Demand is way higher and supply is way lower, right? So there's a big difference. Now, this is a real housing crisis. And there's a lot of demand and very little supply, and the prices will go up and up and up. So in long term, there's no doubt that the prices will go up, and they'll go up again, like very sharply or very quickly when they start going up, because of this demand and supply problem, until they can fix it, right? Now, how can they build 1.5 million homes? To build that, what are the main hurdles? So hurdles are regulations, red tapeism, all that problems. So city or the government or Ontario government is trying to take away all those red tapeism. They are trying to make it easier to get the permits. So the regulations, they're trying to control it. So maybe they will be able to control it. Supply of material, that's another problem, right? There was a big problem of supply. Now that's actually getting better. Supply chain issue is getting slowly and slowly better. So probably that will also get better over time. Trades and workers, that's another bigger issue. We do not have enough trades and workers to build these homes. Canada doesn't get, like, we get a lot of newcomers, but most of them are skilled. They're not trades. They're not these skilled workers. They're mostly either students or educated people. They're working from home. They're working in offices. So we are missing this segment of immigrants or segment of people, which we need to build more houses. And most importantly, we need speculation. We have decreased speculation. So what does it mean? You know what? If a builder right now release a project, which is going to be completed, say, in 27, 28, 29, 2030, right? Say 5, 6, 7 years from now, 4, 5 years from now, people are buying those. There's still people buying those because they know by then the market will be much higher, right? And we would be happy for that we bought now. But think of the houses which are getting built, because houses get built and they get sold before they are built, right? So who buy these houses? Mostly when someone book a house, or when people were booking houses or they were trying to buy houses, they have of like confidence that we are buying now. In a year or 2 years, by the time we get our new house ready, our current home will be at least tens or hundreds of thousands more. And we would be able to sell it and then move to the new house by paying a little bit of difference. Or some cases, we may even save money. We might put some money in our pocket and get a newer or better house. So that was the speculation. That's why a lot of people were buying houses. If you remember, like builders were having big lineups at their, like, whenever there was a new project launched, there used to be like lineups. People used to line up days before the project is actually released, right? Now, in last 4, 5, 6 months, no one is lining up. No one is buying those homes. Why? Because speculation is missing. So we need speculations to sell real estate. People need to be comfortable and confident that they can buy now and then sell later, either for a profit or move into those houses. And that keeps the market going. That keeps the construction going. Without speculation, construction will not go further. So that's the biggest drop. That's the biggest reason that we would be not able to continue building unless speculations come back or speculators come back. You know, since 1980s, no house is built in Toronto without it being sold first. So normally, as you know, builders sell first, then build later. In condo buildings, 70 to 80% of the building is sold before they start construction. Now, because of decrease in this speculation, builders are not able to sell. And then, hence, they won't build, which means it will create a bigger shortfall in supply. So this means it doesn't matter what government does to fix this problem. Until they can bring the speculation back, we cannot build more homes. We cannot build those 1.5 million homes. And this speculation is not coming back, at least for next year, 2 years, 3 years, right? Because people are still scared. So which means by the time it will come back, we all know that. Once the market starts going up, people will come back and they'll start buying new homes as well. But by the time that happens, it may be like the builders start building, it may be a year, 2 year, 3 year, or 4 years before we actually start building at the pace what we need. You know how many homes we need to build every year to maintain this supply? We need 150,000 homes a year in Canada. And we are currently building only 70,000, less than half. Right? Not Canada, sorry, Ontario. So we are building less than half. So we would have a bigger gap, right? So that's the reality. So which means in short run, builders' inventory would rise, which will cause further delays until that inventory is sold, which means less new projects will be launched, because when builders see that they have inventory, they're not able to sell their previous inventory, there won't be any new projects, or there will be lesser new projects, which will create further shortfall, right? And then suddenly there'll be huge demand when newcomers come to Canada. And then we'll try to catch up. So ultimately, in short term, this short-term reality, which is prices are going down, buyers are missing, builders not able to sell, this short-term reality is deepening the impact of the long-term crisis, which is shortage of houses, right? So this short-term reality can quickly change, and in long term, it has to change. So the reality is that we have shortage and we need to accept it. And the prices will keep on going up, and they will go up very quickly once the short-term impact or the short-term reality is done. Then again, we'll have a very robust real estate market. So that's the reality. As you all know, and we have shared this graph many times before, in last 50 years, average home price started from 40,000, and then it was around 1.2 million at the end of overall last year. So it's a growth of about 7% year over year, right? So average 7% growth has happened in the last 50 years. If we go even at the rate of 5% for next 30 to 35 years, the average sale price will go to 6 million. And if we say, you know what, 5% is not even possible, is not going to happen, even if we go with 3%, which is about the inflation, right? Inflation is between 2 to 3% every year in any way. So even if we go with inflation appreciation, we would be more than 3 million. So definitely in next 30, 35 years, our average home price in Toronto would be somewhere between 3 to 6 million. That's not Toronto, actually, that's GTA, Greater Toronto Area. So let's accept this fact and let's make investment in real estate, because that's the ultimate investment. And if you have more questions and if you need to understand more about this, then please feel free to contact one of us, and we would be happy to look into your individual situation, because everybody's situation is different, and we would help you to make the right decision. Thank you. And now we'll open the door for our Q&A sessions. Thank you, everybody. And now it's your time. Any questions you have for our expert panel? Panel is here, and let's start. You can start typing, or you can raise hands or ask questions.
Hi, Sam, this is Shiva. I would like to have a small question.
Sure, Shiva. Go ahead, please.
Yeah. No, I'm new to Canada. I've been maybe it's been going to complete 1 year. So am I eligible of buying a new house, or I have to wait for 3 more years, or I have to get a PR? So what is the process now?
Okay. Now, Shiva, you said you're new to Canada, which is welcome. First of all, thank you for coming to Canada. And now, you are permanent resident yet or not permanent resident yet?
No, I'm a work permit. I just got internal transfer within the same company. So I've been with completing 1 year now, and the project will go on for a couple of years.
Fair enough. Thank you. You know, yes, to buy a house, you have to be permanent resident, but there are exceptions. Because you have a work permit, you can still buy, right? You don't have to wait. Yes, there are certain conditions. If you buy on work permit, there would be some extra taxes to pay, which you will get back when you get the PR. And I believe one of our real estate lawyers can answer this more better. So I would ask either Amit or Sandeep ji to take this question, and maybe they can elaborate more on this one. Amit or Sandeep ji, if you are here. Amit,
can I answer? I'm also here, Sandeep.
Oh, Chris, yeah, sorry. Chris is here. Yeah, sorry. Chris, please go ahead.
In my viewpoint, in my opinion right now, it's 25% that you have to pay taxes over and above purchase price. And I think, if I'm not sure, it's better to be asking a tax guy. Within a year's time, we get your PR, you're eligible for it. But that's the best question asked for the tax. For me, it's 25% you have to pay upfront, and you get it back as soon as you get the PR. But the PR has to be got, and you have to apply within 6 months as soon as you get your PR.
Okay, great. So yes, Shiva, so you can definitely buy, but yes, there's an extra cost to buy on a work permit rather than on a PR, right? So that's about it. But at the same time, for mortgage wise, I think you are eligible for mortgage, and one of the mortgage brokers can even answer that question, Kishore or Amit.
Yeah, from a work perspective, you can definitely work permit. You can absolutely get a mortgage. There's a couple of extra reference checks that they would do, possibly from your country of origin, but work permit status is allowed. And then tagging back into the non-resident foreign tax, you have up to 4 years to claim that rebate. So if the PR is received within 6 months. It's quick, but you have up to 4 years to get it. So happy to help with the work permit. It's completely allowed within the Canadian rules.
Perfect. Great.
Sam, there is
Sam.
a
Thank you, Chris.
question.
Sorry.
There is a question from Deepali. Title search insurance is for the new property. If you can elaborate more on the title insurance.
Title insurance is whenever you buy any home in GTA in Canada, I should say, actually, the mortgage, and you're taking a mortgage, right? So the mortgagor, your bank, has a requirement that you need to have title insurance. So they don't allow you to get a mortgage without title insurance. So sort of title insurance is mandatory when you're buying a home, unless you're buying cash and you have an option to either take it or decline it. But as far as I know, in my career of almost like 18, 19 years, none of my buyer has bought a house without title insurance. So title insurance, almost everybody get when they buy the house. So yes, Inderji, when you bought your homes, you have taken title insurances. So I'm almost certain.
I was just wanting to confirm, because the FPT or there are, I think, 2 or 3 title insurance companies. So the title insurance, is it valid for first 2 years or 3 years when the title search is being done? Or it is, this question is in respect to 32 property has been illegally sold. So which is
I got your point, Inderji. So you want to understand whether this title insurance, which was taken at the time of purchase of property, is it valid only for first few years or it's valid forever, right? Again, my understanding, and again, our lawyers can elaborate more. My understanding is that once you've taken a title insurance, it protects you for the life of your title. For the time, till the time you own this property, your title insurance is valid. Doesn't matter whether you bought the house 2 years back, 3 years back, 10 years back, or 20 years back. That's my understanding.
Yeah, I can chime in on that, Sam.
Yes.
By way of an introduction, everybody, my name is Amit Vig. I'm a lawyer at Vig Law.
Yes.
Title insurance does protect you until such time that you don't own the property anymore. It protects against fraud, title defects, things like that. And there are some cases where even after you sell it, it'll still protect you for the time that you owned it in case a title defect comes out afterwards that you might be liable for. It'll also protect you in rare cases where maybe my wife and I own the property, but I die. She still owns the property, but she didn't have title insurance under her name. It was under my name, so it'd still protect her.
Perfect. Perfect. It's a beautiful arrangement, title insurance. It's the amount of cost we pay. I always say it's worth definitely that much or much more, because we have seen, and Amit can again probably collaborate, that we have seen many times people close the house and very shortly we always find people, they are not paying their like water bills or those type of bills which can go to your title. So at least right away you get more money than you pay back from title insurance, but your title insurance is valid forever. It's a beautiful.
Yeah, absolutely. I think it was Dipali, you asked the question, right?
Inder is actually.
Inderji is
I'm just reading the name, sorry. Yeah. So I think the first part of your question was referencing the new the newspaper articles that we've been getting, and I've been getting it on my phone I get away from the office and I don't want to look at my phone sometimes, and then I see Apple messaging me that more properties are getting sold without the buyer's note or seller's notice. In 15 years, in 25,000 plus transactions closed, I've seen something like this happen once. So when I tell clients it'll protect, against that 1%, I'm hyper, exaggerating. It's not 1%. It's 1% of 1% of 1%. Like Sam said, title insurance is great because it protects you against the things that happen more often, which is you buy a property, the seller tells you that they paid the property taxes for the whole year, and they haven't. Either knowingly or unknowingly, they missed a payment. There's no better confidence that a lawyer can give to a client than to say, hey, if you get a tax bill tomorrow on your first day of owning this property for $10,000 after day one, just give me the bill. I'll take care of it. You won't own a penny. But in terms of like the fraud and that type of thing, very extremely rare. In 15 years, I've seen it once. And that was an example of a guy that was divorcing his wife and brought in a fake wife with fake IDs and pretended she was his wife. Once.
Okay.
And title insurance picked it up and it never went through. So yeah, title insurance is great. It's well worth it. It's about $1 for every $1,000 in your purchase price. So if you're buying a home that's $1 million, it's approximately $800 to $1,000. One time, it'll protect you for the rest of your life while you own that property.
Awesome. Thank you, Amit.
Can I add something, Sam, for the
Yes,
title
Bunny,
insurance?
please go ahead.
Okay, just give me 1 second.
Sure.
I have a little bit of background noise.
And see, meanwhile, Deepak wants to leave, but he said if there is any text questions, I will reply it later.
Okay. Thank you, Deepak. Appreciate your presence. Yes, Bunny, go ahead. I think he's still on mute.
Sorry, yes, I'm good now. So,
Yes.
so Sam, yeah, I think with the title insurance, actually, just to give you a background, everybody gave really good information. You can still purchase it if you didn't buy it originally, because about 15 years ago or 20 years ago, I would say maybe 15 or 20 years ago, it wasn't part of a closing deal, as far as I remember.
Mhm.
And the reason I remember that is only because we as an insurance company, we did offer it to all our clients as one time for a couple of years, if anybody wanted to buy title insurance. So
Oh.
if it is a possibility that someone does not have it, they can still purchase it, buy title insurance on their property. And if you guys, anybody needs information, I can get you the company's name. You can directly buy it from. And the second part is, there's one thing that, as from an insurance perspective, we found was, if you have a mortgage on your property, chances of fraud are very little. So even, especially if you are mortgage free, chances of somebody selling the property on your behalf are much higher. I'm sure the lawyers are able to validate that a little bit further, but that's something we've experienced. Because we had, I think, one claim I remember for title insurance.
Mhm.
So I remember dealing with it, and that's why, had a little bit more in-depth knowledge that the house was mortgage free. And then when they went back to investigate what happened, because there was no other checkpoint. So even if you don't have a mortgage, they say, always keep a small mortgage on your property, 10,000, 20,000, just because it protects from, it's not that easy to sell a property if their bank is also involved.
Fair enough. Great point. Thank you, Bunny. Thank you for
All
adding.
right.
Another
welcome.
question is from Haji. Could you elaborate on speculation?
Great question, Haji. As I mentioned during my presentation about the speculations, for the real estate market, especially for the new homes market, new home or pre-construction market, as we call them, most of the buyers who buy pre-construction are speculators, right? Even if you're end user and you're buying a house which is going to be built, say, 2 years from now or a year and a half from now, right? You are speculating that by the time I buy this house, by the time the house which I buy today, by the time the house closes in a year and a half, 2 years time, my current house would be at least like tens to hundreds of thousands more than it's today. And you count on that money to buy the next house. So that's how the new construction industry or pre-construction work, right? So everybody's speculator when you're buying pre-construction, whether you're buying for yourself or you're buying it for investment. So especially in condos, as we know, most of the people who buy, many of them buy with a mindset they're buying today, and before closing, they'll just sell it in assignment and make profit, right? So that's speculation. And And that's what was happening for last many, many years. And that is keeping, or that was keeping a real estate pre-construction market very much in demand. And because of what happened in last few months, because of the interest rate hikes and the market demand has gone down, nobody, or I shouldn't say nobody, very few people are ready to take that risk. So people are saying, no, I don't want to take a risk anymore. That's why pre-construction is down, right? So that's what speculation is. I hope I was able to explain that, Haji. Great. Anybody else have any other question?
Yeah, Sam, one question. Are there any lake-facing properties coming up?
Great question, Indraji. Yes, there are always properties coming at all different locations. And if you're thinking of any pre-construction, especially I believe condominium, which are lake-facing, yes, there are some new projects being launching this year, which would be near the lake and lake-facing. And I'll definitely bring them to you. Thank you.
Thank you.
Great. Yes, anybody else? Any other question? You know,
Where is Pritish?
okay. Oh, Pritish is here. Yes, Pritish.
No question.
Your question.
No question asked.
Pritish is silent today.
Yes.
I have one, Sam.
Yes.
Hi. So with my fellow colleagues with Law Society, I don't know whether they will agree to me or not as much as anybody would. I'm a little old school. The DocuSign is creating a lot of issues. That's where the Law Society, I think, is also cramping down on a lot of issues where you're considering fraud issues, because most of the realtors, yes, I'm being very frank to the fact that all of us want business, and people will say, oh, they're in Brampton end, oh, they are in Caledon end, and they don't want to come. In the old times, before the DocuSign and COVID came in, all clients needs to come in. There was less amount of fraud, so we could see a lot of people. We could judge them. I have sent people to fraud department with FCT and with Chicago Title in past, about 10, 15 years ago. I've been a lawyer for nearly 25 years. But at the same time, I have sent few people where I was doubtful of their first name and the last name. And when I saw the driver's license and things like that, and I would tell them, don't tell the clients or the realtors, because we are scared of losing business at one point of time. But at the same time, we were very, very careful. But this DocuSign, we do have certain rules and regulations and guidelines with the Law Society. But most of the realtors are now saying, oh, the clients don't want to come. Can you do it? Or if you can't do it, I have another lawyer who can do it. Then we're losing business. We say, okay, we can do it. But that is where I think the realtors also need to step in to say, 90% of your clients need to come in to sign. Only the 10% who are really far away or not sick or not well need to do DocuSign. That's my viewpoint. I still do DocuSign, and I still do all of those things because of clients even in Ottawa. So I do a lot of those things even now. But those clients are my old clients, moved from here, so I know them as much. But new clients in Ottawa, I won't be comfortable doing it. Understand, until Sam, it is you or somebody who's so senior and who I trust, who I work with all the time, it makes sense for me. But if it's a new junior or realtor, I'm a little worried about it. But we still do it because of whatever is going on in the market right now. What do you think about it?
Great. No, good addition, Chris. Appreciate that view as well. Yes, the DocuSign has also created some sort of issues. I agree with you, because nowadays anybody can impersonate and say, hey, I am Sam Wadhwa. And only thing is I have to just press few tabs and my signature is there. And nowadays, in old times, we used to match signatures with the signature of the ID, right? That was there. But nowadays, DocuSign can create its own signatures and they are acceptable. So with technologies, these things will also come into there. Just to add on to this, we have as realtors, as our brokerage, Realtron, which is one of biggest brokerage in Canada, we have received some links from our brokerage, which we can verify the validity of IDs, right? It's a government website. We just need to punch in the number on the ID and it can verify whether this ID belongs to this person or not. Because when someone is faking an ID, they're just faking everything, right? So at least they are trying to tell us, hey, we want to be also proactive, and we don't want to sell somebody's home which they actually don't own. They're impersonating. So we can take those steps. These are small steps. Most of the time we get business which is repeat and referral business. We know people and we don't have to worry about that. But if someone say approach me from a street, an unknown person saying, hey, I want to sell my house, and can you please come and sell my house? So I, as a realtor, it's my responsibility. I assume that at least to double check that ID to make sure that person is actually the right person. So, and I believe same thing, the lawyers would have access to the similar links where they can also verify the validity and maybe also try to avoid these type of frauds. So that's what we can do.
Thank you.
Sam, I have two takes on this. Number one is that it's good that DocuSign share is lost almost 60% of value, which is probably the company may sometimes close down. But coming back to the issue, that how does it happen actually? Because is it basically the realtor and the advocates, both of them, they are compromised? Because when the title search is done, it should come up very clearly in title search that the fraud is being done.
I'll again, maybe Amit, you can handle that question. Amit Puri or Amit Vig, any of you? I know you guys are also expert into this.
Yeah, I mean, you bring up a good point, and I echo the sentiments of my colleague. I guess there's a spectrum. I'll give the example where, you know, I have a paper in my office, and I spoke to another lawyer, and he said, "What's that? We don't have paper anymore." So, you know, it's important to get with the times as well, but at the same time, you know, I lose a lot of sleep over DocuSign too. My advice and what I kind of believe in is just knowing the referral, knowing the client. I agree, if you're a repeat client, it's different rules apply. And just knowing the referral, that's really important. And in terms of your question about the title insurance, you know, I wish it was that easy. It's in there, right? In there?
Yes.
Yeah, in that because the title search is done when the property.
Yeah, but I mean, you know, in there, if we did the title search and we do a title search 100 out of 100 files, then there would be no fraud. If we just did the title search and it was that easy, and you saw that there's, you know, it doesn't match. It's not that easy. There's nothing preventing, you know, someone from coming into my office with fake ID, pretending to be somebody else. That's not something that would come up in the title search. We've gone more sophisticated. Somewhere in the title search, in some corner that you maybe never look at, is a date of birth in the transfer deed. Sometimes, you know, now as fraud gets more sophisticated, we've started to look at the date of birth of the seller. You know, there's things that have happened 10 years ago. You started matching the signatures. But no, I wish it was that easy. The title search itself does not disclose the fraud 100%. It gives you indicators, but there's so many other factors that we have to look at, and that's why there's this whole conglomerate title insurance FCT that is in the background vetting the fraud as well.
Yep.
Yeah, so to piggyback on that, over the past, you know, 5-6 years, and especially streamlined with COVID, prior to COVID, banks would never allow customers to not come in. Every bank would require an in-person meeting to vet that person. And with the advent of COVID back in 2020, banks, as well as a lot of lawyers, along with Mr. Vig, like, we were given permission to start using DocuSign. Even that permission was given to doctors who can see patients via Zoom now. Prior to COVID, all this stuff didn't exist. You always had to do things in person. So the fraud will always exist regardless of the methods in place. When the intention is there to defraud, people will defraud. So, you know, between the bank's checks, our checks as mortgage guys, the checks at the lawyer offices, Again, I'm going to reiterate what Mr. Vig said. It's always about trusting the referral and giving a helping hand to that. If a client were to call me and that I've never met before and it doesn't sound right, then maybe you do a little bit more digging before you start helping. But overall, fraud is prevented, and it's 1 in 100,000 or 1 in 10,000. It's not as prolific as they make it out to be. Like, Sam, what was it? 32 cases of title fraud out of what, 100,000 transactions for Ontario? Like,
That's right.
it's a very small number. I think car accidents are higher than that.
No, good points, everybody. So I think we have at least spent enough time on this topic of title fraud. And again, there would be more developments down the line, and people will be more vigilant, and the authorities will be more vigilant. And I think we can even cut it down further. Yeah, great. Great discussion, everybody, on this title fraud. And any other topic, anything else, anybody else want to touch? I know we have only a couple of minutes left. So I would like, if anybody have any other questions, our expert panel is still here and they're able to answer. Anybody have questions on interest rates, interest rate hikes, or mortgages, or if not, then maybe our mortgage brokers, Kishore or Amit, if you can jump in and give us your insight on this interest rate hikes and what we should expect in the next little while.
So what's been happening is that the federal governments around the world, they are increasing rates with the requirement to bring down inflation. We finally saw a downtick in the number. I think I mentioned this on our last video chat that we had last month. As much as the government is trying, the Bank of Canada, Federal Reserve, UK, everyone is trying to raise rates. At the end of the day, it's going to take some time for the interest rate to populate through the consumer and the impact. In the meantime, I think Kishore mentioned it last time, go with a shorter term, 1 year, 2 year. You could speak to that a little bit more, but rates are going to start to stabilize. It's just a matter of time. The question is the recovery 7 months from now or 27 months from now? It will happen. It's just a matter of maybe about a year.
Perfect. Great. Kishore, can you also add on to this? And
Yes.
you can also divulge some more light on, say, where do you see fixed rates going? Because I have been also listening about the bond market, which drives the fixed rates. So what can you add on that one?
I can add that I agree with Amit in the sense that we're reaching the plateau. From where we were, we can understand we're almost at the peak. And in the last couple of weeks, we've seen a big drop in 5-year fixed, 4-year fixed, longer fixed rates to a point where we can get a 5-year fix at 4.99. So we are breaking that 5% barrier already, right? Again, there might be some short-term fluctuations in this, but you can see that it's reaching that point of friction where it's a threshold. It's not going to pass this amount by too much, short of another economic calamity, right? So it's looking great because the 4.99, when especially first-time buyers hear it, it inspires some confidence, right? In the grand scheme of things, a sub 5% rate in a market where prices are soft, some people are saying, hey, you know what? Let's jump on it now, right? So this is creating, what's keeping me active right now, right, honestly speaking, is first-time home buyers. A lot of first-time home buyers are back in the market.
Yep, great. No, I appreciate that insight, that now we are able to get sub 5% interest rates for fixed rates, right? Last month, they were closer to 6% or even higher, right? So, which means we have already started seeing the drop in interest rates. So that's what drives the market. As we all know, our real estate market, the biggest driver in the real estate market are interest rates. And that has been very much like validated with the recent drop in the real estate market, with such a huge drop because of the interest rates. And now, as interest rates are going stabilizing on the variable side and dropping on the fixed side, I believe it's a positive development.
I agree. I agree.
Wonderful, wonderful insight. Great. Anybody else? Final question before we call it a day. I know it's about an hour, and thank you for sticking with me. And I hope everybody got some good insight into what's happening and what's the real reality of real estate at this moment. Great. I think, you know what, before I stop, I see Shihan is also here. Shihan, can you unmute yourself?
Yeah, I'm here.
Great, great. Shihan is a mortgage broker from Scotiabank. He specializes in the mortgages for people with corporation incomes and income which are not like regular employment incomes. So anybody who needs any mortgages, when you are having corporation, you're having multiple income sources and you want to compile them and get into one big mortgage, Shihan works in that department with Scotia Wealth. So where do you see, with your perspective, Shihan, regarding this mortgage market going?
Honestly, I'm seeing the same thing as what the brokers here have stated. We are seeing rates starting to stabilize. We do have an expectation of prime rate starting to go down, towards the end of this year, maybe early next year. And we are seeing the real estate market picking up again quite a bit, especially in the last couple of weeks with the news that inflation's going down. I think people are getting a lot more confident in being able to invest again into real estate. And from my perspective and what I do, I'm actually able to lump together assets and issue a large line against everything. And this can include residential, commercial real estate, life insurance policies, and investment portfolios. So, giving clients access to that dry powder for the opportunities that are coming up is what we, sort of specialize in.
Perfect. Great. That was a good insight from Shihan as well. And thank you, everybody, again. As most of the mortgage brokers have mentioned that they are getting more busier now, which is another sign when our mortgage brokers start getting busier because they get calls from people to qualify them before they actually buy homes, right? So it means a good sign. So which ultimately means that whatever opportunities we had in real estate market when the market was down for such a long time, it's still there. It might be there for a little bit more, but it may not be there forever. We know that, and may not be there for much longer, right? So keeping that in mind, anybody who's sitting on the fence before they make their move to purchase their next home or investment property or upgrade their homes, I think now is the time. Don't wait too long. And as they always say, never wait for the bottom. Never wait for the peak. Never wait for the bottom. Because only the time we know that it's the bottom is when it has passed, right? So keeping that in mind, thank you, everybody. Thank you for your time. Really appreciate everybody's time today. And thank you for attending the seminar. And we'll definitely connect next month again.
And thank you.
Bye,
And
Sam.
don't forget to report your vacant property if you are in Toronto, because you would be not meeting the deadline, then you have to pay fine also.
Great. Yep, definitely a good
Reminder. Yeah. Thank you.
Thank you, everybody, and have a wonderful day.
Thank you.
Sam. Thank you, Neelam.
And have a
You're
nice
very welcome.
weekend.
Take care. Bye.